From Islamic finance guru, is insurance haram or halal? This is a deep and controversial topic. Typically, at Islamic finance guru, we take the majority view on most issues. However, in this video, I want to share why, in our humble view, insurance should be viewed as permissible. This is a minority view, but it's shared by some serious scholars such as Sheikh Mustafa Zara and others. Here's how we'll structure this video. First, I'll explain the basic concepts behind this debate, then I'll give 3 key arguments for why insurance can be considered permissible. Music. The basic premise to keep in mind is that Islam allows us to mitigate losses by pooling wealth and paying out in case of an uncertain or unexpected loss. For example, in traditional Arabia, if a tribesman accidentally or intentionally killed someone, he might have to pay blood money of 100 camels. No individual could afford this alone, so the tribe pooled their wealth to cover it. This inspired the concept of kafala, or cooperative insurance, which works on the same principle. Mitigating losses by pooling resources for uncertain events is permissible. The debate is about how this happens and the structures around it. The arguments against conventional insurance are threefold. First, there's interest, riba, involved. Second, there's uncertainty, gharar. And third, there's gambling, maysir. In this video, I focus on the most difficult objection: whether Islam forbids transactions with excessive uncertainty. The argument in insurance is that you pay a premium for a product where you may or may not receive a payout that year. Kafala or cooperative insurance is seen as permissible because the contribution is treated as a gift without a legal expectation of return. Similarly, in the tribesman example, members contributed out of goodwill. Considering the objections to conventional insurance, we argue that insurance in most forms should be seen as permissible. The kind of gharar Islam forbids is not necessarily present in conventional insurance. So, what does Islam and the scholars actually say? A few hadith give context. Imam Muslim narrates Abu Huraira said that the Messenger of Allah forbade sales of a speculative nature. This means avoiding disputes over selling what you don't fully possess. Other hadith forbid purchasing unborn animals, milk not yet measured, spoils of war before distribution, charity before receipt, or a diver's catch before it's known. The reason is uncertainty about ownership or quantity. Critics say conventional insurance has similar uncertainty. Neither the insurer nor the consumer knows if a claim will happen. However, with modern data, insurance companies can calculate risk very accurately. They can predict accidents or events based on millions of data points. This reduces the uncertainty significantly. Consumers are protected by an open and transparent market where they can compare prices and coverage, lowering the chance of exploitation. A helpful analogy is comparing insurance to a security guard. Both provide peace of mind or protection. Most of the time, the security guard or insurer is idle. But when an event occurs, they act according to clear contractual duties. Thus, insurance provides tangible, permissible benefits similar to security services. Modern insurance contracts are sufficiently clear and certain, especially with available big data. Insurance allows people to have certainty in business and daily life. In coronavirus times, this has been highlighted. The Prophet allowed a transaction called Bay al-Salam, which let farmers of Medina pay in advance for goods, giving certainty despite future delivery. He allowed unequal exchanges in some contexts, prioritizing societal ease and economic function. Insurance similarly helps businesses predict outcomes in crises, underwrites larger transactions, and creates long-term, stable pools of wealth that can circulate in the economy. So, while insurance involves some risk, it brings enormous benefits. Historically, Sharia allows transactions with benefits even if they carry minor risk. Scholars unambiguously allow kafala, and conventional insurance today mirrors this economically. Both pool contributions, pay employees and managers, handle claims, and share surplus. Reciprocity is present in both. Contributors expect benefit, unlike pure gifts, but this aligns with kafala principles in the modern context. Modern insurance must be profit-oriented to manage global risks and billions of people. This is not negative. It enables large-scale risk mitigation and the benefits of insurance. A few notes. Kafala insurance is widely accepted and permissible. Life insurance has specific nuances, which will be covered separately. If local law mandates insurance, e.g. for driving, scholars allow it. In summary, there are three main reasons why insurance should be considered permissible. Its modern form mirrors kafala principles, reduces risk with data, and provides essential societal and economic benefits. I'd love to hear your thoughts. Please subscribe and comment. Assalamu alaikum. Music.